Hello and welcome to the Elevate Podcast in partnership with AdviseWise, the Equity Release Council and Age Partnership. And today we're going to be looking at why property should be part of wider retirement conversations, as well as how the landscape has changed within later life lending. And I'm luckily joined with Daniel Edmondson from AdviseWise.
Hi, I'm Daniel. I'm the Senior Strategic Partnerships Manager at AdviseWise, who are a later life fintech company specialising in sourcing CRM and mortgage flow.
Thomas Brett from Equity Release Council.
Hi, I'm Tom Brett. I'm Head of Commercial and Business Development at the Equity Release Council. We're a trade body and standard setter in the later life lending space.
And John Keys from Age Partnership.
Hi, I'm John Keast. I'm a later life specialist at Age Partnership, with the UK's #1 equity release advising firm.
So this topic has never been more prevalent. We've got an ageing population, 1 in 5 first-time buyers, actually over 40, unless you're lucky enough to pay off your mortgage in 10 years. I'm not sure you have clients that are in that position. And the first-time buyers over 50 has actually increased by 25% year on year for the last 5 years. I think this space has an air of nervousness. Correct me if I'm wrong, I guess. There is some nervousness when it comes to advisors around equity release. There is that air of concern. Why do you think that is, and how do we get away from that?
I think initially you'd start with, you're absolutely right. There is that stigma, that grey cloud, for want of a better phrase. And I think that's possibly followed from old style of products. And you get that across all different industries, right? As a product that evolves, as it improves, as it introduces more customer safeguards, which I'm sure Tom will introduce and formalise in just a second, we start to remember the old product compared to what the needs are now. So I'm not surprised there is that stigma that follows this product and market.
I agree. I think it's reputational issues that come with the products from products 15, 20 years ago. And when there's an issue with those products, it comes to light much later. So you'll get something in the news about a customer who was unfairly treated 20 years ago, and that sort of facilitates this lack of belief in later life lending as a legitimate option for advisors and customers.
Yeah. And as an advisor, what's that?
Yeah, I think a lot of advisors that have come from the mortgage industry have done their own sort of homework on it. Yeah, which is great. That's what we need. The ones who haven't, as we say, bad news travels very, very fast indeed, and it sticks. And advisors generally aren't aware of the good work and the improvements that are being made in standards throughout the Equity Release Council.
Yeah, we know that the landscape in the industry, the market has been changing. Populations increasing and things like that. So with that, how do you think consumer demand is changing?
I think consumer demand is absolutely changing and in the right direction for growth of this market. We are asset rich and cash poor, or to add to that, asset rich and income poor into retirement. So it's important that we recognise that housing wealth plays an important role within the retirement conversation. It's not to say things like a lifetime mortgage is always the right solution, but it's one of many solutions that advisors should have within their toolkit.
Yeah, it should be considered in every conversation in retirement, there's no question. And we know as a nation we're not saving enough into retirement. And what are the other options to help prop up retirement apart from property? And there aren't any, there's no question.
Yeah, I think I've only got to look amongst my social circle as much as anything else to see how many people have got full final salary benefits and who's going to have a huge shortfall in retirement. And again, that's the fall in value of pension planning in general means that the biggest asset is the property. So that's where it should be focused on to maintain lifestyles or do whatever you want to do in retirement.
Yeah, we commissioned an independent report with Fair Finance, and by 2040, I think 51% of people will be looking at property wealth to fund retirement. On top of that, and about £23 billion worth of money will be released from property at that point. That's what it's looking at the moment.
Yeah, and I'd echo that as well. I think a really good shout for a piece of literature that really does highlight the opportunity in a small booklet that quite literally takes about 20 minutes to read through. So I will try and plug that where possible, but it really does highlight the opportunity that property wealth plays. And I think the risk to advisors isn't talking about something perhaps they're not qualified, it's completely ignoring it and being oblivious to it, which could lead to bad customer outcomes down the line.
Yeah. It's important to educate yourself, isn't it?
Absolutely.
Yeah. For me, I think of retirement, I simply think of my pension and my savings. It's a bad habit to be a part of, and how do we get rid of that?
I think it's probably a legacy thing, right? So the traditional way to do life as a young person,
Thanks.
not as young as I am now, is to get into the workforce, to pay into your pension, get a mortgage on a property, and then pay that off with the hopes that you are unencumbered, you own that property once you get to retirement, and then you can live off your pension. Well, actually, you need to kind of flip that now. We're getting people that are entering retirement that don't have the provision for a standard lifestyle. They are choosing between heating and eating, for want of a better phrase. And they're sat on maybe £200,000-400,000 of asset that's not been used. Yet they might have a pension that perhaps hasn't performed, or perhaps they haven't contributed enough throughout their life. And I think that's only going to get worse in years to come as different generations come through. Certainly for me as a 31-year-old now, I think a lot of my friends and peers aren't aware or pay enough into their pension because they want and need it now. And there's various social pressures that add to that. I don't know if the guys have any more to add to that point.
I think it's slowly changing, actually. I've been speaking about equity release for 14, 15 years now. And a lot of the pushback you get from customers back in the day was about leaving their property to children and not touching it. You know, they've paid it off because they want to pass it on as inheritance. And that is changing now, and people are recognizing that it's something that they've worked hard for. They deserve the retirement that, that they've worked for, and they can help their children earlier as well. I don't know, John, you've been advising a lot longer than I have. Has it changed in your...
It's constantly evolving, John. It's constantly evolving. What we're seeing is a lot of, as you say, people's living standards fall, but also seeing people becoming more educated these days, with the 60, 70-year-old bracket being very internet savvy and being able to conduct almost their own research. One of those, for instance, is they're aware of the changes that have made. People are coming to age partnerships advisors and saying, I want to make some payments back to this if I can, blah, blah, blah. But it didn't happen before, because people are more aware now of what's available out there in the market, which can only be a good thing.
Yeah, I mean, when I started my career in equity release, I was speaking to customers on the phone, and there's a really good education in equity release, because you get to hear their misconceptions about the products, you get to hear their worries, get to hear the reasons why they're looking at these things, and you get to understand what their neighbours think and their family members think, and all those sorts of conversations. Not plugging the council, but our standards sort of get rid of a lot of that when you talk to them. So, you're never going to lose your home. You're never going to owe more than the property's worth, the right to make payments, as you said, all those sorts of things. Make it much more palatable for customers to understand that this is just a type of borrowing. It's right for some people. It's not right for everybody.
Just looking and taking that holistic approach and looking at everything, not just the one.
Yeah.
Absolutely.
And I could probably add to that by, coming to the events later last year, probably speaking to a lot of people that are listening to this series. Those misconceptions do follow through in the industry, in the various different products, so mortgages and protection, and general insurance. And a lot of people know the old style products, and Tom just briefly mentioned there about the customer safeguards, and it's probably worth diving into those a little bit more if we can at this point, because it's easy to glance over them, but I think they are fundamental for the products and for the success of the products in the future as well. The fact that somebody can remain in their property for the rest of their life is amazing. The fact that they can make these optional payments, like a standard mortgage, to mitigate interest accrual. And that's one of the biggest worries for a customer taking out a lifetime mortgage, because the interest grows. And in some instances, it can grow quite significantly. And then, I don't want to take Tom's limelight. Maybe to please add to those on the other features and safeguards.
No, you're right. And I also add, it's not just customers with those misconceptions; it's people within financial services as a whole.
It is.
IFAs, the more resident mortgage advisors, all those sorts of people. So part of my role a long time ago was educating, large networks of financial advisors and all those sorts of people. And when you get them to understand that it's it's a legitimate product and the safeguards are in place, it's you see, I used to call it the light bulb moment, when they realise actually this is I've got a few customers actually where this might help them in their situation. And the council started with 4 product standards. We brought out a 5th in 2022, which was that right to make penalty-free repayments. And we think that's saved customers over £300 million worth of interest accrual over the last few years alone. So real world benefits of the work we do, which is it's always nice to, hang your hat on something. And then our 6th product standard came out last year, and that's the removal of early repayment charges if you move into care, or crucially move into a family member's home who's providing long-term care as well. So another real world benefit, and another little anchor on to show customers that these products are safe and worth investigating, and advisors as well, of course.
Thank you so much for listening, and we'll see you in the next episode.